Hello, friends. Good evening. Today, I have been invited amongst you to present a session on filing of income tax and do's and don'ts for the particular financial year 21-22. All right. So, I'm sure my screen is visible to you all, and we can have the questions as and when people have any doubts. We can have questions accordingly. So, I'm starting with the presentation. So today we are going to discuss all about the income tax compliances. Like what are the due dates, and who should be filing the ITR, what are the benefits of filing the ITR on time, and so on. So starting with who should be filing the ITR. Firstly, let me tell you that the due date for financial year 21-22, which we also call as assessment year 2022-23, the due date is 31st of July 2022, and we should not be delaying in filing the income tax return. I think all of you would have already received your Form 16s, those who are into employment, or otherwise you have all your documents ready and you can go ahead and file your income tax returns. Who should file the ITR and what are the benefits for filing of ITR on time? So, firstly, let me start with like who are eligible to file the income tax return. So, not everyone is eligible to file the income tax return only when your total income is exceeding the minimum income limit, which is rupees 2.5 lakhs. Then you have to file your ITR mandatorily. Okay, so even if you are on the verge of completion of 2.5 lakhs, make sure that your other incomes, including your savings bank interest, fixed deposit interest, or any other such income, is cumulatively exceeding rupees 2.5 lakhs. Those who are having income, and they think that okay, my income is not below not above 2.5 lakhs, but they have some TDS, okay, some tax deducted, maybe for any purpose. So it is advisable you file your income tax return, and such tax which is deducted will be refunded back to you because you had no tax liability. Filing of ITR is mandatory if you want to carry forward your losses. Like, say, for example, if you are trading in shares or if you have any house property loss, okay, and in that case, if you want to carry forward these loss for further years, okay, so then in that case, you have to file your ITR. Otherwise, that loss will not be adjusted in the future years. So, we may discuss this in the upcoming slides. You have to pay your tax dues timely. So I think people who are in employment, for them every month the salary comes after the tax is deducted. So for you guys, the tax has already been taken by the company and deposited to the income tax department. But for those people who are having different incomes where the TDS is not deducted, or if the TDS is deducted, it is not of the complete tax what is going to be applicable. In that case, you are required to pay advanced taxes. So whenever your tax liability is crossing rupees 10,000 in the particular financial year, you are liable to pay advance tax. In that case, make sure your advance tax is always paid on time. So we have quarterly taxes. This has to be paid. So for this particular financial year, the due date is already over. So just make sure that when you're filing the income tax return, you are taking all the tax which is paid into consideration. For other people who are getting a visa, for them, the department would ask you to file the income tax return. For anyone who has a foreign travel expenditure of more than 2 lakhs, or they have paid electricity bill for more than 1 lakh, they have to mandatorily file even if they are not having an income more than 2.5 lakhs. And for anyone who has deposited more than 50 lakhs in your savings bank account, or rupees 1 crore or more in your current bank account, they also require to file the income tax return. Moving ahead to understanding what are the ITR forms and what are applicable to the individuals. All right. So there are in total there are 7 ITR forms, out of which 4 ITR forms are applicable to individuals and remaining 3 are applicable to entities. So starting with ITR 1. So ITR 1 is basically for those individuals who are resident individuals and who are having income less than 50 lakhs. So if you are having salary income, any interest income, or if you are having one house property income, like say for example, if you are having one house and you have put that on rent, so if you have one house property income, you can file ITR 1. In other cases, when your agricultural income is less than 5,000, you have to file ITR1. Otherwise, if you have any other condition, if you have capital gains, if you have more than one house, if you have agriculture income more than rupees 5,000, if you are a non-resident, or if you are a resident but not ordinary resident, in that case the other ITRs are applicable to you. So moving on to ITR 2. Now, whatever condition is not applicable in ITR 1, it will come in ITR 2. So in ITR 2, if you are a person having income more than 50 lakhs, or if you are a director of a company, if you are holding unlisted equity shares, okay, here unlisted equity shares also include the ESOPs given to you by the company. If you are holding such shares, you have to file ITR 2. You have to declare those shares at the cost value whenever it was allotted to you. Going forward, if you have a capital gain income, you have to file ITR 2. ITR 3 is basically for those people who have business income or profession income. Okay, so only when you have a business or profession income, ITR 3 will be applicable. Along with other income, you can file ITR 3. Now, what is ITR 4? ITR 4 is for those people who are opting for presumptive taxation. Now, to give you a brief about what is presumptive taxation. So, presumptive taxation is where the government gives you an opportunity to, without maintaining any books of accounts, you can show a minimum amount of profit from your gross receipts. So, whenever you are having a business or profession, in that case, if you are under such limit, for business it is rupees 2 crores, and for profession it is 50 lakhs. So, if you are under such limit, you can opt for presumptive taxation. For business, you have to show a minimum of 6 or 8%. When I say 6 or 8%, it means whenever your cash receipts are if you are having cash receipts, then you have to show a minimum of 8% of profit of the gross turnover. And if you are having non-cash receipts, say for example from any banking channel, then you can opt for 6% of profit out of those gross receipts, right? So this is for business. For profession, there is no such breakup. Whatever you are earning up to rupees 50 lakh, you can opt for ITR 4 in 44 ADA, and you can pay minimum of 50% of tax on that gross receipts, right? So it is applicable for doctors, for lawyers, for CA, for CS, everyone. Moving ahead, so if you use Cleartax, then there you can just simply put your details. The software will automatically choose what ITR is applicable to you according to the information you have provided. Now, what are the documents required for filing of income tax return? So there are few basic documents what you need to keep handy while filing your income tax return. First is your Form 16. Okay, so Form 16 is actually provided by the company whenever your financial year ends and the company has taken down all your TDSs. They will provide you with Form 16 in details, having what all deductions have been given to you, what all salary has been given to you. Okay, if there is any exemption which you are eligible, I'm sure you might have given your declarations. That also will be covered in Form 16. Apart from that, you should have Form 26AS. You can download this from the income tax department. You can have your own, I think you already have your income tax login credentials. You can download Form 26 from there, right? So it will be having the details of all the income which are reported to the department. Either there is a TDS deducted or not. Okay, in certain cases, you will find that the income is reported, but there is no TDS deducted. So in that case, you just need to report that income. But if you have any TDS, you will find the information there. In certain cases, what happens is your employer might have not deducted TDS properly or reported properly. Please have a check that in your Form 16, whatever information is given, as per that, it is same reflecting in your Form 26AS. Sometimes what happens is there is some clerical error, and the TDS amount is either underreported or overreported. It is underreported, then you have to obviously tell them that this was a tax which was underreported. If it is overreported, please inform them, because otherwise this will form your income also. Okay, the additional amount which is reported, it will be a part of your income. So please make sure that these two are in line. So recently, the previous year, in the department have introduced one more form called as AIS, which is Annual Information Statement. This annual information statement contains more details apart from your Form 26AS. So as per the name, what it suggests, So annual information statement will have all your details of your equity share transactions, mutual share transactions, okay, your purchases or sales of these things, any SFT transactions, okay. So any high value transactions, if you're having, if you're purchasing some FDs, or if you are having any kind of asset which is bought or sold. In certain cases, if you are putting your property on rent, in that case, if the employer has reported, it will show in your form EIS. So this is a really very important document. Do not miss any information which is declared in this form, because the department will have a cross verification from this particular form. Apart from that, these were the main documents. Apart from that, you can have your bank statements to calculate your savings bank interest. You can have your fixed deposit interest certificate from banks. You can download it from the net banking, or you can just approach the bank for that. And if you have any other income where the TDS is deducted, so please ask Form 16A from those persons. This will be a record that you have, they have deducted the TDS for you and it is deposited. So you can cross verify the same with Form 26AS. If you have taken any house property on loan, you can just get the interest certificate from the bank. That is also a very important document. And apart from that, if any proof of if you have invested in any LIC or any such schemes where it is eligible to claim as a deduction, so you can have those proofs. So the exact amount what is mentioned in that document, you can take that. If you have any capital gain transactions, if you have any share trading documents, or if you have any such capital gain transactions, then those statements you can have. If you have sold a house property, you would be required to have your purchase and sale deed of the house property, where the stamp duty value will be mentioned. Or if such other values into consideration, you have to adopt that amount. Moving ahead, so what is EPF and what is PPF? You already know, I think it is Employee Provident Fund and Public Provident Fund. So these you can claim your deduction under Section 80C. And there are such other deductions under Section 80C where you can, if you have already invested for financial year 21-22, you can always show that in your income tax return. If not, if your Section 80C or other such sections, if they are not having such limit already covered, then you can go and invest in these schemes to save taxes. So if you have children and if you're paying their tuition fees, you can claim that in 80C. Or if you have taken life insurance or such other things, you can always claim that under 80C. Even if you have taken house property, so most of you would be knowing that you can claim interest on house property loan in income from house property up to rupees 2 lakhs. So if you are paying any EMI, and the EMI will be having the component of interest and principal, in that case, the interest component can be shown in income from house property as a loss up to rupees 2 lakhs. The principal component that can go in Section 80C. So the entire limit of Section 80C is 1,50,000. Going ahead, so there are multiple other sections where you can claim deductions, which is 80CCC, which is a pension plan, employer's contribution to NPS. So if you have reported to your employer that you are opting for this employer contribution to NPS, then that limit is up to rupees 1,50,000 in 80CCD1. 80CCD2 is 10% of the salary. So there is no monetary ceiling. So if it is employer's contribution to NPS, it can go 80CCD2. But that you have to check with your employer if you are eligible for that or not, or if they have an option for that or not. Then it is employees NPS. So there is additional amount which was given 2-3 years back, which is 80CCD1B. There you can claim additional 50,000 over and above the employee's contribution to NPS. This is the you can go on your own and in any nationalized bank, you can just invest the amount in this section. Going forward, so I think you would already be aware about this, that there was a new tax regime launched, where you can actually decide which regime is better for you. Either it is the old regime or the new regime, and according to your income and according to your deductions what you're going to claim, you can choose which regime is actually beneficial, which is saving more taxes for you. So to understand this, so I think you are already knowing about the old regime, because we are filing it since very long. For the new regime, okay, so if your income is up to rupees 2.5 lakhs, you are anyways eligible to file the income tax return. So with every increase of 2.5 lakhs of income, there is an increase of 5% of tax up to rupees 15 lakh, beyond which it is 30%, right? But for old regime, there was simply 5%, 20%, and 30%, right? So in new regime, it starts with 5%, it gradually increases to 10, 15. So for particular blocks of income, it has a 5% increase of tax. But in new regime, there are many changes, there are many deductions you cannot claim, right? So please make sure that whenever you are opting for new regime, you have properly compared your income tax computation, whether it is saving you taxes or not. Otherwise, old regime is good for you if you have more deductions. So if you see here in this slide, so we have a minimum of deductions required to face the same taxes. So what it is trying to say is, whenever you are opting for new regime, please make sure that at least you should have this much of deductions. So until these amounts, both the regimes will have the same taxes. If you are investing more than these amounts in some of the deduction sections, then you can offer old regime because it will save you more taxes, right? So you can go through the slide once, and then it is actually self-explanatory. Like if you're having a salary income, so there's a standard deduction of 50,000, but in new regime that it is not available, right? So, and also in new regime you won't have any other such ATC or ATCCD deductions. So yeah, in this case, if you are saving taxes in new regime, it is fine. Otherwise, if you have more deductions, it is always advisable to offer old regime. Right. So here it is a calculation is being shown. If your income is up to rupees 10 lakhs, then how the calculation works. So if you have salary of 10 lakhs, then we have a standard deduction. So this is for old regime, right? So if we have a standard deduction of 50,000, and then we have the other deduction under Chapter 6A, which is ATC, and so on. So here, as per this, your total income is coming to 8,12,500. Okay, so income tax under old regime will be 75,000, and education cess is 4%. Okay, in the new regime also, the income tax is 75,003. So the tax here up to 10 lakhs is almost same, right? Beyond this, you will see that if you have more deductions or less deductions, which is more beneficial. So in our previous example, if you had no ATC investments, then new regime would have been a better option for you. So you can use this software for filing your income tax returns. It is very simple software because it is it will guide you on each steps. You can just quickly just upload your form 16, and the entire data will be parsed automatically. And if you have changed jobs, that also option will be available. So you have to give your brief information, like your personal information, your name, your date of birth, and everything, and then you can keep on scrolling and moving to the next tabs. So here they will be asking you to give the breakup of your salary. So as per form 16, you can refer your form 16 and give your salary breakups, and keep on moving to the other tabs. So you will find their deduction tab separately. You can just choose whatever deductions is applicable to you, and make sure that the TDS is being taken as per form 26AS. If there is any discrepancy, please immediately report to the person who has deducted the TDS but has not filed properly. So the TDS has to go because that is the advance tax you have already paid. Or if you have paid any self-assessment tax, then or any other advance tax separately, you can enter it under these columns. So there should be some additional information available for you. You have to provide your Aadhaar card, bank account numbers, IFSC codes, and also please make sure if your income is more than 50 lakhs, you have to file ITR 2. The software will pick up it automatically, but you have to report under schedule asset and liability all your assets, including immovable assets and your other assets such as jewelry, vehicles, or shares and securities, bank balances. So please make sure that if your income is crossing rupees 50 lakhs, you have all these information handy. All right. So this will be very easy. Otherwise, you have to go and search all this information. So please make sure this is also available before filing. Then Finally, on the tax filing tab, you can find out whether like if you have to pay any taxes or if there is a refund. And also you will have an option to compare and switch. Okay, which means is if you are like entering the details as per the old regime, but if you compare and the software shows you that the new regime is eligible, like it will be more beneficial to you, so you can just switch to the new regime immediately. You don't have to again manually enter all the information. You can simply switch to the new regime and you can save taxes there. So I think this was all about ITR, and if you have any questions, please, I'm open for it. So you can just switch to the new regime immediately. You don't have to again manually enter all the information. You can. So I think we have the questions coming on YouTube and it is being answered. So, friends, I think this session would have been helpful to you. If you find it helpful, then you may drop a like and on the YouTube. And if you have any questions, you can please ping, and the same will be answered. And it was really nice having you, like a wonderful audience here. Thank you so much.